If you are on Medicare right now and you have more than one cost coming out of your check or your bank account every single month, there is a very good chance that at least one of those costs is not something you legally owe. The average American senior on Medicare overpays by more than $2,400 every single year. Not because they did anything wrong, not because they misread a form, because the system that collects the money has no mechanism to tell you when you qualify to stop paying. And no one whose paycheck depends on collecting that money is going to volunteer the information. There are 7 specific Medicare costs I am going to walk you through today. 7 costs that millions of seniors are paying right now that they are either fully exempt from, legally entitled to have reduced, or qualify to have eliminated entirely based on rules that are already written into federal law. Most people know about one of them. Almost nobody knows about all 7. And the one that surprises people the most, the one I have seen cost a single retiree over $4,000 in a single year without them ever noticing, that one is number 4. And I promise you, it is not the one you are thinking of. In the next 18 minutes, I am going to show you the income threshold that Medicare uses to decide how much to charge you and why it is almost certainly based on the wrong year of your life. The specific form that legally forces Medicare to recalculate your premium based on what you actually earn today. The 7 costs one by one, who qualifies to eliminate each one, and exactly how to claim the exemption. The 4 words you can say to a Medicare billing office that immediately trigger a formal review. And the one move that retirees with savings can make before the end of this year that permanently lowers their Medicare bill going forward. If any money is coming out of your Social Security check for Medicare right now, watch this video all the way through. The number I am about to give you is not the number Medicare publishes. It is the number Medicare uses to decide what you pay. And for a significant portion of the people watching this, that number is wrong. My name is Marcus Graves. I am an enrolled agent, which means I am licensed by the federal government to represent taxpayers directly in front of the Internal Revenue Service. I do not work for Medicare. I do not work for an insurance company. I sit across the table from federal agencies on behalf of real people, and I look at what they are actually paying versus what the law says they owe. And here is what I see on client returns year after year that nobody talks about. Medicare billing errors, premium surcharges based on outdated income, and cost categories that clients qualify to eliminate entirely sitting right there unclaimed because no one ever told them the rule existed. Here is why no one tells you. Medicare is not your doctor. Medicare is not your friend. Medicare is a federal billing system, and like every billing system, it collects what you agree to pay until someone formally disputes it. The insurance companies administering your Part D and your Medicare Advantage plan make more money the longer you stay in the wrong plan at the wrong price. Your hospital billing department has a team whose entire job is to process payments, not to find you exemptions. And the Social Security Administration, which actually deducts your Part B premium from your monthly check, does not send letters that say you may be overpaying. They send letters that say, here is what we are taking. I want to be clear about something before we go any further, because this is the misunderstanding that causes people to click away and leave real money on the table. This list is not only for seniors who are struggling, and it is not only for seniors who are comfortable. The 7 costs I am going to walk you through hit both groups. For some of them, the biggest win goes to the retiree on a fixed income. For others, the biggest win goes to the retiree with savings and a pension. I am going to tell you on every single one exactly which group it helps and how, so that no one watching can say this does not apply to me. Because the honest truth is that Medicare is overcharging at every income level, just in different ways. Before I get into the 7 costs, I want to tell you about a client of mine. I am going to change her name. I will call her Patricia. Patricia is 71 years old. She is a retired school librarian from outside of Knoxville, Tennessee. She worked in the public school system for 29 years. She had a modest pension. She had a paid-off house. She had a Medicare supplement plan she had been paying into since she turned 65. And she had never once questioned the bill because the amount came out of her Social Security check automatically, and she assumed that automatic meant correct. Patricia was not wealthy. Patricia was organized. She kept every document. She had a folder for Medicare, a folder for her pension, and a folder for her utilities going back to 2018. She was the kind of person the system counts on to pay quietly and never ask questions. 2 years before she came to see me, Patricia's husband passed away. He had been a contractor. In the last full year they filed taxes together, her husband had finished a large commercial project that pushed their joint income significantly higher than normal. It was a one-time event. It was not their real income. It was just the way the calendar fell. Her husband passed in January. That high-income tax return was the one on file. What Patricia did not know, what no one at the Social Security Administration told her, what no one at her Medicare plan told her, what her general tax preparer did not flag, was that Medicare was now using that one anomalous high-income tax return to calculate her premium surcharge, not her current income as a widow living on a pension and Social Security. Her income from 2 years ago when her husband was still alive and had just finished the biggest job of his career. Patricia was paying $472 a month in Medicare Part B and Part D premiums combined. The correct amount, based on her actual current income as a surviving widow, was $174.70. The difference was $297.30 every single month. Over the 2 years she had been paying it, Patricia had overpaid Medicare by just over $7,100. She came to me because her accountant mentioned in passing that she might want to look at her Medicare premiums, not because anyone told her she had been overcharged, not because Medicare sent a correction, because an accountant mentioned it in passing. We filed one form. I am going to tell you exactly which form later in this video. Medicare recalculated her premium within 60 days. Patricia received a credit applied to future premiums. She told me the thing that stayed with her was not the money, though $7,100 is not nothing. It was that the form existed, the rule existed, the remedy existed, and for 2 full years, not a single person or system whose job touched her Medicare account had ever pointed her toward it. That is exactly what is happening to seniors all over this country right now. And every single one of these overcharges starts with the same root cause. The assumption that what Medicare is billing you is what you legally owe. It is not always. And today I am going to show you the 7 places where that assumption is costing you money. Let us start with the cost that Patricia was paying, and that I believe is the single most widespread Medicare overcharge in America today. IRMAA stands for Income-Related Monthly Adjustment Amount. It is a surcharge that Medicare adds on top of your standard Part B and Part D premiums once your income crosses certain thresholds. In 2026, the standard Part B premium is $185 a month. If your income is above the threshold, you pay significantly more. The surcharges range from an additional $74 a month all the way up to an additional $443 a month depending on your income tier. Here is the problem. The income Medicare uses to calculate your IRMAA is not your income this year. It is your income from 2 years ago because that is the most recent tax return the Social Security Administration has access to when they set your premium. For most retirees in a stable situation, that 2-year lag does not matter much. But for a very specific and very common set of circumstances, that 2-year lag is costing people thousands of dollars a year in surcharges they no longer qualify for based on their actual life. The circumstances that trigger this problem are all around you. You retired and your income dropped. Your spouse passed away and you are now filing as a single person at a lower income. You sold a business, a rental property, or a large investment and had a one-time spike in income that is now over. You had a divorce and your income changed. You experienced any significant reduction in earnings that has not yet shown up in the most recent tax return Medicare has on file. In every one of those situations, Medicare may be charging you a surcharge based on income you no longer have. The fix is a form called the SSA 44. It is a 2-page document available directly on the Social Security Administration's website. At the top of the form, you will find a list of qualifying life-changing events. Retirement is on that list. Death of a spouse is on that list. Divorce is on that list. Work reduction is on that list. You complete the form, attach documentation of your current income, a recent pay stub, a pension statement, a Social Security award letter, and submit it to your local Social Security office. Once the form is processed, the Social Security Administration recalculates your IRMAA based on your current income rather than the 2-year-old return. If the recalculation puts you in a lower tier or eliminates the surcharge entirely, the adjustment is applied going forward, and in many cases, a credit is applied to future premiums for the months you overpaid during the review period. For the fixed income retiree, this can mean the difference between affording prescriptions and skipping them. For the comfortable retiree who retired from a high-earning career, this can mean recovering thousands of dollars in surcharges that were never accurate to begin with. The form is free. The process is free. The correction is your legal right. And the Social Security Administration will not file it for you. Medicare Part A covers hospital stays, skilled nursing facility care, hospice, and some home health services. Most Americans assume Part A costs money because everything in healthcare costs money. Most Americans are wrong. If you or your spouse worked and paid Medicare taxes for at least 10 years, which is 40 quarters of covered employment, your Part A premium is zero. Nothing. Fully paid for through the payroll taxes you contributed during your working years. The vast majority of American retirees qualify for premium-free Part A, and most of them have it without realizing it because they enrolled through the standard process and it was applied automatically. But there is a group for whom this becomes a real and costly problem. People who did not work 40 quarters in covered employment. People who spent years self-employed before Medicare taxes applied to self-employment income in the early years of the program. People who worked for certain government employers that had separate pension systems and did not pay into Medicare. People who immigrated to the United States later in life and did not accumulate 40 quarters before turning 65. If you are in one of those situations and you are paying a Part A premium, the first question to ask is whether your spouse's work record qualifies you. A retiree who worked only 15 quarters in covered employment but is married to someone who worked 40 can access premium-free Part A through the spouse's record. That applies even if the spouse has already passed away, as long as the marriage lasted at least 1 year and the surviving spouse has not remarried before age 60. If neither your record nor your spouse's record gets you to 40 quarters, there is a reduced premium tier for people with 30 to 39 quarters that is significantly lower than the full premium. That step-down rate is something many people in that situation do not know to ask for. The action is simple. Call Social Security at 1-800-777-21213 and ask them to review your premium-free Part A eligibility based on both your own work record and your current or deceased spouse's record. That one call has eliminated Part A premiums entirely for people who were paying them for years. This one is specifically for the lower and fixed-income retiree, and I want to be direct about that because it is the one the comfortable retiree can skip. But I also want to be direct about something else. The income limits for these programs are higher than most people think, and millions of seniors who assume they earn too much to qualify are wrong. Medicare Savings Programs are federally funded, state-administered programs that pay some or all of your Medicare premiums, deductibles, and cost sharing on your behalf. There are 4 levels: the Qualified Medicare Beneficiary Program, the Specified Low-Income Medicare Beneficiary Program, the Qualifying Individual Program, and the Qualified Disabled and Working Individuals Program. Each level has its own income and asset limits, and between them, they cover a wide range of financial situations. The most powerful level, the Qualified Medicare Beneficiary Program, pays your Part A premium if you have one, your Part B premium, your Part A and Part B deductibles, and your coinsurance and copayments. For a retiree on a modest fixed income, this program can eliminate thousands of dollars of annual Medicare costs in a single enrollment. In 2026, a single person can qualify for some level of Medicare Savings Program assistance with a monthly income up to roughly $1,660. A married couple can qualify with combined income up to roughly $2,239. Those are federal baseline figures. Many states have set their own limits higher, and some states have eliminated asset tests entirely, which means the savings account or modest investment account that previously disqualified someone no longer counts against them. The application goes through your state Medicaid office, not through Medicare directly. Your local state health insurance assistance program, which operates under the name SHIP, can walk you through the application at no charge. To find your local SHIP counselor, go to shiphelp.org and enter your zip code. If you are enrolled in a Medicare Savings Program, you also automatically receive the Extra Help Program for Part D, which brings me directly to cost number 4. This is the one I told you about at the beginning of this video. This is the cost that surprises people the most. And this is the one I have seen cost a single retiree over $4,000 in a single year without them ever noticing, because the cost does not come as one bill. It comes as a premium every month, a deductible at the start of the year, a copayment on every prescription, and a coverage gap charge in the middle, and most people absorb each piece separately without ever adding them together. Part D is Medicare's prescription drug coverage. It is sold by private insurance companies approved by Medicare, and the cost structure has 4 phases: the deductible phase, the initial coverage phase, the coverage gap sometimes still called the donut hole, and the catastrophic coverage phase. In 2026, the standard Part D deductible is $590. The standard monthly premium varies by plan, but averages around $55 nationally. Co-payments on brand-name drugs in the coverage gap can reach 25% of the drug's cost. For a retiree on multiple brand-name medications, total annual Part D out-of-pocket costs can easily reach $4,000 to $6,000. Extra Help is a federal program that eliminates or dramatically reduces every one of those costs. With full Extra Help, your Part D deductible is zero. Your monthly premium is covered up to a benchmark amount. Your co-payments on covered drugs drop to $4.50 for generics and $11.20 for brand-name drugs. The coverage gap does not apply to you. Every phase of Part D cost sharing is either eliminated or capped at a minimal amount. To qualify for full Extra Help in 2026, a single person's income must be at or below roughly $22,590 per year, and assets must be below $17,220. For a married couple, the income limit is roughly $30,660 and assets below $34,360. Importantly, your home, your car, and most personal property do not count as assets for Extra Help purposes. If your income is modestly above those limits, you may still qualify for partial Extra Help with reduced but still significant cost savings. You apply for Extra Help directly through the Social Security Administration at ssa.gov or by calling 1-8007-721-213. The application takes about 30 minutes. If you qualify, the benefit is applied to your Part D plan directly, and you will receive a notice in the mail confirming your eligibility level. If you are already enrolled in a Medicare Savings Program, you receive Extra Help automatically. No separate application is required. But if you are not in a Medicare Savings Program and you think your income is too high to qualify, check the current numbers before you assume. The limits have increased meaningfully in recent years, and a significant number of seniors who applied based on current figures qualified when they had previously been told they did not. This one is for the comfortable retiree who enrolled in a Medicare supplement plan, also called Medigap, when they first turned 65, chose a plan, and has been paying the same company ever since without ever comparing rates. Medigap plans are standardized by federal law. A Plan G from one insurance company covers exactly the same benefits as a Plan G from any other insurance company. The benefits are identical. The premiums are not. The premium for the exact same Plan G coverage can vary by $80 to $150 per month between insurance companies in the same zip code, depending on how that company prices its plans and how long you have been with them. During your initial Medigap open enrollment period, the 6 months that begin when you turn 65 and enroll in Part B, you have a federally guaranteed right to buy any Medigap plan offered in your state at the standard rate regardless of your health history. The insurance company cannot charge you more because of pre-existing conditions. They cannot turn you down. They cannot make you wait. After that window closes, most states allow insurance companies to use medical underwriting, which means they can charge you more or deny you coverage based on your health. This is the trap that keeps people in overpriced plans. They assume they cannot switch because of a health condition. In many cases, that assumption is wrong. There are situations in which you have a guaranteed issue right to switch Medigap plans, regardless of your health. Your Medicare Advantage plan is leaving your area or reducing its service area. Your employer coverage that was supplementing Medicare ends. Your Medicare Select plan no longer has a network provider in your area. You move to a new state. Any of these triggers gives you a window to switch Medigap plans without medical underwriting, and insurance companies are not required to inform you when that window opens. Even outside of a guaranteed issue window, some states have enacted their own protections. California, Connecticut, Maine, Massachusetts, New York, and Washington all have stronger Medigap switching rights than the federal minimum. If you live in one of those states, you may be able to switch plans for any reason during a state-defined open enrollment period without answering any health questions. The action is to call your state health insurance assistance program at shiphelp.org and ask a counselor to compare your current Medigap premium against every other company offering the same plan letter in your zip code. That comparison is free. The counselor has no financial interest in which company you choose. And on a $150 monthly difference compounded over a 15-year retirement, getting this right is worth more than $27,000. This one is not a premium. It is not a surcharge. It is the bill that arrives after a procedure, a hospital stay, or an emergency room visit, and it is the category where the most money is left on the table by the most people at every income level. Under the No Surprises Act, which took effect in January 2022, you have specific federal protections against certain categories of unexpected medical billing. Balance billing from out-of-network providers in emergency situations is prohibited. Out-of-network cost sharing for emergency services cannot exceed what you would pay for in-network care. And any provider or facility covered by the No Surprises Act must give you a good faith cost estimate before scheduled services. Separate from the No Surprises Act, every nonprofit hospital in the United States is required by federal law to have a financial assistance policy, sometimes called charity care, and to make that policy available to any patient who asks. The income thresholds for hospital financial assistance are often significantly higher than people assume. Many hospital systems provide full financial assistance to patients with incomes up to 200% of the federal poverty level and sliding scale assistance up to 400% or higher. For Medicare patients specifically, there is an additional protection that almost nobody uses. You have the right to request an itemized bill for any hospital stay or procedure. Studies of hospital billing consistently find that a significant percentage of itemized hospital bills contain errors, duplicate charges, charges for services not received, upcoding of procedure complexity. Requesting an itemized bill and reviewing it line by line is free. Hiring a medical billing advocate to review it on a contingency basis, meaning they only get paid if they find and recover errors, is also an option that costs you nothing up front. The action is 3 words spoken or written to any hospital billing department. Itemized bill, please. After that, if the bill still feels wrong, call your state health insurance assistance program. SHIP counselors are trained to review Medicare explanation of benefit statements and hospital bills and flag errors for dispute. Original Medicare, Part A and Part B, does not cover routine dental care, routine vision care, or hearing aids. That is a well-known gap and a real one. What is less well known is that a significant percentage of Medicare Advantage plans do cover those services, and a significant percentage of the seniors enrolled in those plans are not using the benefits because they do not know they exist, they have forgotten they enrolled, or they assumed their plan worked like Original Medicare. The average Medicare Advantage plan in 2026 includes some level of dental coverage, some level of vision coverage, and some level of hearing benefit. The dollar limits vary widely. Some plans offer $1,000 or more in annual dental benefits. Some cover preventive vision care fully and provide a glasses or contact lens allowance. Some provide a hearing aid allowance of $1,500 to $2,500 per ear every 2 or 3 years. If you are in a Medicare Advantage plan and you are paying out of pocket for a dental cleaning, an eye exam, a new pair of glasses, or a hearing aid fitting, the first thing to do before paying that bill is to call the member services number on the back of your Medicare Advantage card and ask one question: does my plan cover this service, and what is my remaining benefit for the year? That question takes 4 minutes. The answer can mean the difference between paying $3,000 for hearing aids out of pocket and paying nothing. Beyond using benefits you already have, every year between October 15th and December 7th, Medicare holds its annual enrollment period during which you can switch Medicare Advantage plans with no medical underwriting required. If your current plan has weak dental, vision, or hearing benefits, the annual enrollment period is your window to move to a plan with stronger coverage for those services at no penalty and no health questions. The State Health Insurance Assistance Program offers free plan comparison counseling during the annual enrollment period. A SHIP counselor can pull up every plan available in your zip code, sort them by the benefits you prioritize, and help you compare total annual costs including premiums, out-of-pocket maximums, and supplemental benefits. That counseling is free. The insurance companies whose plans you are comparing do not pay for it. Your state does. It exists specifically so you have an independent expert on your side during the one window each year when you can make this decision without penalty. There are 3 specific situations that create the highest risk of overpayment and that I want you to know about before you make any of these moves. The first is the year you retire. The year you stop working, your income drops, but the tax return Medicare has on file still reflects your full working income. The IRMAA surcharge kicks in immediately based on that old return. The SSA 44 form is the fix, and it should be filed the month you retire, not 2 years later when the right tax return finally reaches Medicare's system. The second is the year a spouse passes away. The surviving spouse moves from married filing jointly to filing as single, which compresses the IRMAA income bracket significantly. A surviving spouse who was paying no surcharge as part of a married couple can suddenly find themselves in a surcharge tier as a single filer, even though their own income has not changed. The SSA 44, filed promptly after the death of a spouse, corrects this before the surcharge is applied rather than after. The third is the Medicare annual enrollment period that passes while you are not paying attention, October 15th to December 7th every year. That is the one window in which every Medicare beneficiary in the country can freely compare and switch plans without health questions and without penalty. Missing it means waiting another full year. And a full year in the wrong plan at the wrong price, after everything you now know about how wide those differences can be, is an expensive year to sit through by default. Patricia eventually got all of it sorted. The SSA 44 corrected her premium surcharge. A SHIP counselor reviewed her Medigap plan and found a comparable Plan G from a different carrier at $94 less per month. She switched during a guaranteed issue window she had not known she had when her Medicare Advantage plan briefly left her county 2 years earlier. She had never used it. She also called her Medicare Advantage card's member services line, something she had never done in 6 years of enrollment, and found out she had $800 in unused dental benefits that had been rolling over partially from year to year under her plan's rules. She used $600 of it at her next appointment. The total annual savings across all changes, just over $5,200 per year. The total time it took, 3 phone calls, 1 form, and 1 appointment with a SHIP counselor. She told me later that the thing nobody warned her about was not the money. It was the simplicity. Every single one of these systems has a door. The doors are not advertised, but they open from the inside, and all you have to do is know where to push. If you take one number away from this video, take this one, $2,400. That is what the average senior on Medicare overpays every year on costs they are either exempt from, entitled to have reduced, or qualify to eliminate based on rules already written into federal law. Medicare is not going to call you and tell you any of this. Your insurance company is not going to call you and tell you any of this. The only person who can file the form, make the call, and claim the exemption is you. Go to marcusgraves.com/checklist. I have put together a free Medicare cost checklist that walks through every one of the 7 costs in this video, the exact form or phone number for each one, and the deadline you need to watch. Print it. Keep it with your Medicare card. Go through it this month before another premium cycle passes. Send this video to one person you love who is over 65 and on Medicare. It does not matter if they are getting by on Social Security alone or sitting comfortably on a pension and savings. The odds are very good that they are paying at least one of these 7 costs right now for no reason at all, and one share from you could be worth more than $2,400 to them next year. That is what this channel is here to do. I will see you in the next